Hello and welcome to another MCO market update on Tesla. Here on the Tesla chart, we are still tracking an active ending diagonal pattern to the upside. Here from the swing low that formed end of 2022, early 2023. And I'm tracking that as an ending diagonal because a fifth wave can be an ending diagonal, and because the first rally that occurred between end of 2022 and the July 23 highs, that's a very, very clear, crystal clear three-wave move to the upside. So we've got 3 waves up, we've got 3 waves down. So we have a 1-2 setup. By the way, I just noticed I've got let me just change the wave degree so it does match the decline. So 3 waves up, 3 waves down, and now we are moving up, in this third wave, most likely at least. That's the idea. However, obviously also Tesla is suffering, it's a strong decline from up here. That pullback, we've been watching for that, or we watched for that back then, but it clearly is quite a sharp and deep pullback, and it did it in quite a direct fashion. But so far, it's a 3-wave move down. So some people might ask, why isn't this 1, 2, 3, 4, 5? Technically even valid, but based on proportions and guidelines, not the most probable outcome. So if this is really bullish, then we had our 1-2 setup. This was only the A wave of a third wave. This local top in December 24. The pullback is a B wave, and we are ready to start a C wave. At least I'm watching this area down here. I'm going to zoom in a minute, And I'm watching this area down there for potential signals that a C wave rally starts. That would be wave C of 3. Then we can get a wave 4 and a wave 5. So that's the pathway higher I'm tracking for Tesla. Have we bottomed already? I mean, that's the main question, right? So let's go to the 1-hour time frame. Let's talk about main support here. That support area is between $224 and $159, whereas $159 is really deep. But because we're dealing with a B wave pullback, most likely, it can be deep, okay? I have definitely a 3-wave move down. So that's a 3-wave move down. But what I haven't got yet, I don't have a 5-wave move up yet. So as a first confirmation that really this C wave to the upside has started, which can take us into the $700 to $800 range, I would need to see some kind of a reaction that is really noteworthy and impulsive. Unfortunately, as you can probably see, there is not yet that clear reversal structure. But the price reacted nicely to the 61.8 retracement, the golden ratio level. And that's also the area that I've highlighted in previous updates, to basically watch for a reversal. But it all comes down to, do we have enough confirmation yet? And not really. I mean, at this point, I would not be surprised if we form another low. The problem then would be that it starts to look like a 5-wave move decline, right? So at the moment, ideally, the Fibonacci support zone here holds. That is located at $232 is the main level that I really would like the price to hold. Below that, I mean, I don't have any clearly bullish setup anymore below that level. I mean, it's not invalidated until it really breaks below the $218 level, which is the 10th of March low. But below $232, the upside follow-through will reduce in likelihood. I'm considering here, from a bullish point of view, that this could turn into a diagonal pattern. Remember, we're dealing with larger diagonal structures, ABC structures, and so on. Therefore, I would not necessarily rely on proper 5-wave movements to the upside. So we have to consider, and that's where the context comes into play, we have to consider that the move to the upside is going to unfold just in corrective 3-wave structures. So one pathway would be A, B, C in wave 1. Then this here would be a wave 2 pullback, and ideally I'd like to see a reversal now from this region. Earliest indication that we've bottomed would be a break above that last swing high there around 271.50. And then, however, I would also only watch really for 3 waves up to complete the third wave. And there could be a 4th and a 5th. And that would be a 5-wave move up. Now, another pathway the market could take is here a 5-wave move like that, but the yellow count is more like an alternative. 1, 2, 3, 4, 5. Technically valid as a leading diagonal, but this 4th wave is too deep. But also here, we want to have it on the radar at least as an option. So bottom line is I'm considering that on the 10th of March, 11th of March, a more substantial low formed. So far only 3 waves up, which is still acceptable to track higher prices, but only as long as Fibonacci support holds. Basically because we don't have the luxury of working with 5-wave movements at the moment. That's due to the context. It just is what it is. We have to also track higher prices when only 3-wave movements show. It's just not high we don't have clear probabilities. Let's rather say it like that. Therefore, we rely more on context and micro support levels. So you've got the levels there to watch. You've got the area to watch. I mean, this could be an ABC structure to the downside. It might get another low. I would actually expect another low on the micro level, but ideally, to keep the bullish pathway alive, we're going to form a low in this region. So that could be important over the next week. And pay attention to the 232 level and the invalidation point at 218. So yeah, that's the update about Tesla. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates about Tesla, updates about the S&P 500, the NASDAQ, check out our stocks and S&P 500 membership. Here we cover also the Tesla chart regularly. And you'll find the link in the description, but also pinned in the comment section. Thank you very much. Bye-bye.